I can't hear you. You're
I
muted.
do
I
it
was gonna say. I think
all.
you're muted. I don't want to say it. I don't want to stop your flow, but I think you're muted.
All the time. I'm telling you, I always start these things that I'm freaking muted or the mic is messed up. I apologize. All right, guys, welcome to the Solid Report. We got our boy Nate Dogg. Last name is DAWG, right?
Yeah, you can say that. We can go that way.
Okay, Nate Dogg. Nate Dogg's the name. Nate Dogg. How do you pronounce the last name, by the way?
Endicott. So like Endicott College.
Got it.
Endicott College. Yeah.
I've never heard of Endicott College before.
It's somewhere. It's an all-girls school in the Northeast or something. I don't know. I've just been asking for it.
How would I know about that?
I don't know.
All right.
Some people might.
Yeah, that's true. Yeah, I know. Seriously, SMH. I always do this all the time whenever I join. But appreciate everyone for being here. Nate's got 4 people on the channel. Wolf Financial 3 people. My channel 6 people. Let's go, guys. Let's go. All right, it is a great day today because what do we have? We have the S&P 500 at an all-time high. We also have the Qs 2% away from an all-time high. Zeta is not an all-time high, right?
No. I think its all-time high is like in the 30s.
I mean, not an all-time, but it's not even a 52-week high, I don't think.
No, I don't think so. No.
Okay. For those who don't know, our boy Nate here, he is a longtime Palantir shareholder. So what is that, like a 20 bagger in your pocket? Also a long time HIMS bag holder here. Sorry, shareholder here. My bad. He also joined us in Nebius. Nebius has been a great one for quite some time, doing well on that one. What else there besides Zeta? Is that it? Or
pretty much just Palantir, Zeta, Nebius, and a HIMS bag holder.
I love the concentration. Shareholder, man.
Yeah.
Still call yourself a bag. Not just kidding around. Nah,
I used to be a shareholder. Now I'm a bag holder. I averaged up and then got screwed because of that. My average used to be in the teens. But
honestly, there will be a day though where HIMS comes back and it's no longer a joke. It's kind of like SoFi. SoFi was a joke for a long time.
Oh, SoFi was a big one too. I never mentioned that. I was strictly 2020 to 2023. I was 50% Palantir, 50% SoFi. That was my entire portfolio. And then I concentrated heavily into Palantir. Then I got rid of SoFi in like January of this last year, which I missed most of the move. But I averaged down to like 5 and sold out like 11.
Okay.
I missed the run to 25. So,
yeah.
It is what it is.
I know it is what it is. But I mean, Zeta's looking pretty good.
Oh, yeah.
So we are very big Zeta shareholders, guys, and you guys already know that. We're actually gonna go over a few things today in today's show. First thing we're gonna dig a little bit into the jobs report, try to gather some thoughts with Nate over here, what he thinks about it. I mean, we're more micro people, so really there isn't that much that's gonna matter as far as it, but just to look a little bit to the numbers to see what's going on there. And then I actually have a clip from the Meta and Oklo partnership.
It was right before I hopped on. That's pretty big.
Yeah, that's a pretty big one. And it was really funny because Oklo was up 20% when the market opened and Meta was like flat. And like they both kind of like went the other direction. Like Oklo faded and Meta went up. And I was like, yeah, nature's healing. Thank goodness. Like, come on. Like Oklo should not be up 20%. They still have no revenue. But anyways, I mean, I'm not an Oklo bear. Just like Meta's valuation makes no sense. While Oklo just definitely doesn't make sense at this point. But I mean, who knows, guys? And then, of course, we're going to do the market close. Your boy Amit is traveling across the country right now. So he will, unfortunately, he won't be doing a show. But the market close must go on, all right?
We're still in his audience.
Yes.
We're finishing the market. Someone has to.
Seriously. The market close must go on. I tried to get Steve to come on here, and Steve is busy working. I mean, like, why is he? I don't understand. I know he's working.
What is that?
Who earns a primary income anymore? It's ridiculous. But finally, we're going to be going over the Zeta CEO and Dan Ives interview. I think it's like about a 37-minute interview. We're going to do a little bit of a watch party over here. And we also have a special guest joining on here, known as Mr. Zeta. Unfortunately, that's not the CEO, but it's still someone just as good. Someone who's been very heavy in the Zeta community. I don't know if Ron can make it. I'll try to ping Ron to see if he wants to join in as well.
Might as well.
Yeah, but we're gonna do a little bit of a watch party later, and then we're gonna provide our thoughts as far as the recent price action goes, as far as the company goes, some some argument and some, I don't want to say bearish theses out there, but like some, some risks that are out there that probably get a little bit too amplified. But we're going to get into that. This is going to be quite a long stream. So if you don't have 2 hours of your time, it's all good. It's all going to be recorded. All right. You could go ahead and check out. There you go. Oh,
I'm ready to go. I got my caffeine. I'm ready. There we go. There we go. What is that?
Yeah, there you go. It's C4, baby. Yeah, cheers.
Nice.
Cheers all the way from Chicago to LA, and no longer back in Florida. Dude, no longer back in Florida. Let me tell you something. It was nice to wake up at like 7:00 a.m. there, and it's like 4 a.m. over here in California. And like I just felt like I could post whatever, and like it was, but now it's like back to the regular life. I actually woke up at 9 p.m. here because got back pretty late yesterday and stuff, but here I am back in LA, where it is nice that the market closes and I have like the rest of the day ahead of me.
Yeah,
it's kind of annoying. Like, I mean, I guess it's not so bad for Chicago.
Chicago, I love it because I just wake up an hour earlier and then get done an hour earlier, so I miss the traffic of, especially when I go to the gym. I miss the like 4 p.m. rush. I get there at 30 instead, so it just saves me because I wake up like an hour earlier and still work the same 9 to 5 time zone as Eastern, and I like it a little better. But waking up at like 5:30 a.m. every day and working would kind of suck. So
where do you live in Chicago again?
So I'm in Ravenswood, like 40 minutes north of like the west loop via train. It's like
so you're not like downtown?
No, I'm not like downtown. No.
Okay, that's good.
But I could get downtown pretty quick if I wanted.
Yeah. I feel a little behind the bandwagon here. As Aria is also in Zeta too, and you guys are posting gym workout stuff all day, and I haven't walked into a gym in like a few weeks now, and it's just like
picking up your kids is enough.
Yeah, honestly, my kids are just a workout on its own, but it's just like, man, you guys are probably lifting like 3-4 plates, and I can't even do like 2. So I don't know. Maybe I'm not. Like, we're talking about benching. Like I can't. I still
benching 3-4 plates. 3-4 plates would be nuts. I can do 2.5 plates, a little bit more than that.
That's still a decent amount.
Not 3 plates. I can't do 315. I wish I could. It's the end goal.
That's like 275, right?
Yeah, my max is like 295, 290.
295. Okay, that's pretty good. That's pretty good.
But I wish I could do 3 plates. 315 would be great, but I got a long time coming for that because now I'm going into cardio. So anyway.
Okay, you're in a cut. Yeah. All right. Yeah. Well, I don't want to. I don't dig too deep into that stuff. I mean, I could talk about gym stuff all day long. I could talk about football all day long, but we're gonna be here talking about stocks all day long. So, and Zeta as well. All right, so let's just do a quick roundup over here. Thank you for everyone that's over here. If you haven't tuned into the Wolf Financial YouTube, Wolf_Financial, go ahead and tune in there. Right now, we're streaming from all these channels right now. I mean, we're going to continue streaming all of them for the rest of the stream, but I'm going to be cutting off the stream from my channel probably about halfway through. So go ahead and head over to the Wolf Financial, or you can head over to Nate's channel as well. Actually, I gotta find that, and I'll
come on over
on the bottom. Yeah, I know we gotta spread some love, guys. I open up Internet Explorer or Microsoft Edge, open up Firefox, and open up all those things and just stream it everywhere and show us all some love. And while you're there, go ahead and subscribe to Nate's channel. He's doing some good things over there. You just started your YouTube this year, right?
Yeah, I just started posting first week of Jan.
Okay.
This week.
Are you still buying?
You know what? Gotta get into it. Oh. What'd you say?
You have your portfolio you're doing, right? The new portfolio?
Doing like just $100 a week, showing the retail how to actually invest with a low amount of money. Because I feel like when I first started, it was always like people were doing $10,000 buys, and it's overwhelming.
I know. It's a little unrealistic. Like no one just deposits $10,000 a week or something. Well, not no one, but like some people do. But it's like the average retail person doesn't really do that. But it was actually really funny because I remember like starting back in 2023. Like really heavily investing in the market. And I'm just like, I thought I was late. And then now it's 2026. And it's like, I could imagine people really feel like they're late, but like, what if this goes on for another couple of years? It's like, well, the late was not late.
Dude, I have the classic story of I literally started investing in 2019. The 2 stocks I bought, Nvidia and Tesla. I sold both of them in the December crash of 2019 because of that was just 18. In the March crash of 2020, sold them both and didn't learn my lesson. And then from there, learned my lesson. But it's literally the classic story of, I bought this stock at super cheap valuation at 30x and I sold it early.
I mean,
I did that with Nvidia and Tesla. Yeah, true.
Yeah, you still got Palantir. What was that? Single digits you bought it?
Yeah, my average. I think I bought it initially in November 2020. I wish I could say I bought a DPO, but November 2020, and then I averaged down to like 11 something in average.
There you go.
With a lot of shares. So
nice. I mean, if you're in the audience, you're also long Palantir, go ahead and post your average on Palantir. It must be some pretty crazy numbers you guys are posting. And anyone who posts above today's price, I mean, kudos to you. Like, that's some serious conviction to buy and hold in today's price. But hey, guys, you never know. Palantir might be a $1 trillion company. We'll see. But let's get right into it here. So I got this clip that I wanted to play. I don't even know why I can't even find it here. All right, so I'm going to do it right here. Boom, boom, boom. Oh, wow. Everything's got to sync over to my laptop. That's always fun to do. All right, here we go. Yep. All right. So I have, that's not it. My bad, guys. Hold on. See, I'm not good at
also, just to know, we actually are closing in on a 52-week high for Zeta. It hit 24. I don't know what it hit intraday, but it closed at 24.70 in February of 2025. So we're getting close to a 52-week high. Yeah.
I will take it. I will take it. So is this the one with the links in there? No, that's not the one. That's not the one. That's not the one. Oh my goodness. I can't find the link here. It's not syncing over from my other one. Yeah, no, I got this clip from the jobs report that I want to play. Here we go. I'll just copy it from my remote desktop over here. And I will play it. Dude, I'm not on time.
All right, just get back into it.
I mean, it's all good. It's all good. I mean, you guys are still around here. Oh, I saw like 100 people drop off the video right now because they're really not that skinny around. All right, let me just play this. And then we will go through some of the thoughts here after.
The December employment report, and Rick Santelli is standing by at the CME in Chicago. Rick, I'm just going to give it to you now since you got about 10 seconds just for a wordy warm-up.
Yeah, no, absolutely. And we want to pay close attention to the 420 level in 10s, very significant technically. And of course, this is the D's jobs report hitting the wires. Non-farm payrolls expanded a bit less than expectations, 50,000 in rearview mirror. The 64,000 now gets downgraded a bit to 56,000. 50,000 would be the weakest since we had a negative number, and that was in October when it was minus 105,000. Now, let's look at average hourly earnings month over month, up 0.3% as expected, and that really does chase around the previous month where it was way too low. There were issues there, up 0.1%. And that was the smallest wages gain since March of 21. So this gets us back on track. The same is true for year-over-year earnings. 3.5 last month seemed too low. It's now 3.8. That's actually 0.2 better than expected. It equals where we were in August. To find a higher number, you're in July of 25 when it was 3.9. Now, hours worked, we want to pay close attention to this because if it goes up or down, it really does have employment issues. 34.2, so we lost a tenth, both with regard to expectations and in the rearview mirror. 34.2, well, we had a lot of those this year. But to keep in mind, to find a smaller number, you're going back to the very first month of 25 when it was 34.1. Now, let's look at the unemployment rate. 4.4. 4.4. We're expecting it to go down from 4.6 to 4.5, so it comes in less than expectations. And last month, 4.6, that, in my opinion, was the reason we had some of the big market moves, was downgraded to 4.5. So it's now off the charts. And if we look at the labor force participation rate, and we really want that to expand a bit, it didn't, but it came in as expected at 62.4. Unfortunately, our last look was a bit better at 62.5. And finally, the underemployment rate, known as U6, comes in at 8.4. That's really good news because it also had an anomalous read last month all the way up at 8.7. Now, 88.4 would be the lowest read since, well, we get back on track. September of last year was 8.0. We started last year at 7.5 to give you an idea of, yes, it's good news it's coming down, but it definitely popped a bit. After all of that, what are we seeing in the marketplace? Well, here we hover right now at 417, which is unchanged on the day and down 2 on the week. But we did test that level at 420, and it came back off. That's the level to pay attention to. To me, the big meat on this report is the lower employment rate. And I think, of course, that may make the Fed's notion of all its anecdotal evidence of a weakening labor market a little bit less potent. Joe, back to you.
All right. So that was definitely a lot of excitement for unemployment numbers. That guy is like,
dude, I was gonna say I love his energy for employment numbers. I mean, he makes the most dull statistic ever seem like we're going to the moon.
Yeah. He's definitely a contraindicator.
Yes.
I still remember when the 10-year is like 4.5, like back in October of 2023, and he's like, this thing's going to 13%, and like that was the day that it topped, and like he's a contraindicator. So now I'm a little bit worried. Now, but you know what? I mean, those jobs. What did you think about the job numbers and like how the market was impacted by it?
Yeah, I don't know. I'm at a point where it's obviously a monthly recurrence, and so. I mean, you saw on the graph, I think it hit a low of 4.1 in June, a high of 4.6 or 7 in December or November.
Yeah.
And so I just feel like we're at a point where it's kind of plateaued or flatlining around that 4.3 to 4.5 range, which I think is fairly healthy. And I take the approach of kind of sort of the Jeremy Lynch approach of just seeing my surroundings. And so for me, when I went to, say 4.5 in November, when I went to the mall in December, I mean, it was just insane the amount of people going out shopping. Now that's not a clear indication of jobs and everything being well there, but the economy seems stimulated in that regard, right? Like obviously people can be using credit cards and such, but I just take the approach of like looking around. Are people going out? Are people going out on the weekends? Are people spending money? I don't know. It's hard for me to be bearish on the macroeconomic environment right now, especially with going into a year of interest rate cuts. I mean, it's hard to be bearish in my opinion.
I agree with you. I mean, it doesn't. It's like kind of like a double-edged sword, right? So you live in Chicago, and you probably live in a nice area too. I live in LA, and the K shape, so you have like your upper class and you have like your lower class, right? Obviously, there's people in the middle, but like the reason why they say K shape for people that don't know is because you have your upper class, which is constantly growing and getting much stronger and growing wealth in society. And then you have your lower side of the K, which is like, they're not really losing money, but like they're not really benefiting all of the rise in risk assets, inflation, and everything, right? So while the upper part of the K, they tend to have more money invested in the stock market, more assets, whether it's housing, gold, silver, hard assets, or whether it's other types of assets and so on, like businesses, they are benefiting the most because with GDP now projected at 5.4%, of course, stocks are probably going to go up over the long term for that, or most likely go up in long term. Businesses are going to thrive. There's going to be a lot of tax benefits and everything for all these businesses that are thriving. And that tends to be more in the top part of the K. And the lower part of the K, they don't really own that many businesses, right? And maybe some of them do, but generally speaking, people who are in the lower part of the K, they don't really own businesses. They don't own that many risk assets or stocks. They don't own any property, whatever. And all they're doing is getting paid less to pay more for inflation. And that's why this whole thing is actually getting worse. So like when I go to the mall or something and I see the mall's packed and people are buying all the Abercrombie stuff and all of the toys and everything from Target, I feel like that's only one side of the boat that we're really seeing. True. Meanwhile, if you look at the lower end of the K, they're shopping at Walmart because Walmart is getting good data as far as people shopping there and everything. And it's like they're just trying to survive. And it's a bit unfair. But the problem with this is that this country was originally built to give everyone a chance. But it was also built in capitalism. And now capitalism is getting a little crazy now, where it's like only one side is kind of benefiting at this point. And then you have the administration here to benefit one side as well. So I don't know, man, especially with the government starting to buy $200 billion of mortgage bonds.
Yeah, that was interesting. That was interesting.
That was some crazy news to see. Like, I did not expect QE to happen from a fiscal standpoint.
Yeah, especially this quickly too. And on that scale, I mean, 200, you said 200, it was 200 billion, wasn't it?
200 billion. Yeah.
Yeah, that's insane. I do. Yeah, I think it is, like you said, it is a double-edged sword. Yeah, it is pretty, like you said, we're seeing a lot of economic data from Walmart, and then also I'm seeing personally a lot of people shopping in Chicago and also in Columbus, Ohio, where I'm from. So yeah, it's definitely, but it's again, it's just because we're asset owners, like you said, it's hard for us to see a bearish macroeconomic environment when we're going into quantitative easing. We're going into, like you said, 5.5% GDP. And you and I are probably both lenient towards AI names, which also are seeing extreme growth.
Yeah.
And a lot of positivity there. So.
Yeah, I mean, we're obviously going to get more into that because Zeta is somewhat, I would say somewhat, because they didn't originally start out as an AI company, but they're generally a SaaS company. So they have their software available on their cloud, and people sign up and they sign up for seats and usage and everything for on their application. Now they're having Athena, which they're starting to introduce a lot to the environment, which gives basically that LLM that gets aggregated on their own data. But like a lot of companies are doing this, right? So I also posted down here Nate's YouTube in case you guys want to go ahead and check that out. Go ahead and shoot him a subscription there. It is what is it, like $0 to subscribe?
Yeah, I think it's free. I think if you want it to be.
I know it's $0. I mean, it's free. It's a little expensive.
It costs your time, I guess.
Yeah, that's true. That's true. Hey, time is money, baby. Time is money.
Yeah.
And we also got Nate's X account over there, x.com/Endicott Invest. His last name is not Dog. I just call him Nate Dog. Rest in peace, Nate Dogg. I don't think anyone can replace Nate Dogg, but you're just gonna have to be Nate Dogg. Maybe you could be like Nate.
I'm close second.
Nate DAWG, not DOGG, right? Actually,
DOGG, yeah. It is DOG. I think it is DOGG. You're talking about Nate Dogg.
Yeah, that's right. Man, freaking legend. All right, so that was cool to talk about. Now we also had the Oklo news that I mentioned this morning, which is. I mean, as soon as I saw that headline, I'm like, look, Oklo's going to be up like 15-20%.
Don't even tell me. I don't know what is up right now. I was literally saw Meta partner with Oklo. I was like, oh, easy 25%. Like anything like that. What is that? You said it's up 10% now still?
Well, let's go ahead and check it out right now. Let's go ahead and check out how high Oklo is. All right, I'm actually sharing the wrong screen. Hold on. There we go. All right, so oh man, my thing crapped out. One sec. Yeah, no, I remote into my desktop at home because it's just a lot easier to do things on there. And of course, it's never going to be working when you want it to work because nothing ever does.
Currently up 8.11%.
Are you looking at it?
Yeah, looking at it right now.
Good, man. Nature's healing. Nature is healing.
Yeah, it was initially up pre-market 20.3%.
Yeah.
Like I said, I assumed 25%. And throughout the day, it slowly just sold off. Yeah, I'm curious. I'm going to look into some physical AI because this has got to be just.
Thank goodness Amazon is green. Amazon was red earlier today. I'm just like, man, this thing could never catch me. Oh, see, nature is healing, man. Nature is healing, and Meta is up 1%. Look at that trend up. Nice throughout the day for Meta. That's always good to see because Meta, I think Meta is undervalued. But the problem is that, you can't get like a 20% gain on Meta in one day, but you can certainly get a 20% gain on Oklo one day if you sold at the top. Like that's the reason why a lot of these things get pushed up. And of course, BMNR is down 4% today. That was actually green earlier today. So it's interesting to see how like Bitcoin cannot hold any level up here, right? The good part about this chart is that it's making somewhat higher highs here, but then it pulled back, but it didn't make a lower low. So like it still is in a bit of an uptrend here. But sometimes some people say like if you really zoom out though, this looks like a bear flag. So I mean, I don't know. I'm not trying to catch the bottom of crypto right now. We got a few other good things right now, so I'd rather hold strength. Obviously we have Zeta here. Oh yeah, this would be the 52-week high right here.
Yeah, I think it's 2660 is what I saw in Robinhood.
Correct. 2660 is the 52-week high, and this chart looks pretty strong. But can it go higher? I mean, it could go higher like right now, but it's just
so I think we have earnings in about 5 weeks, 6 weeks between now and then. I think it'll probably stay between 23, 26 unless some more news comes out. But I think when we get that first quarter, we're going to hit profitability. My assumption, I don't actually know, but I'm assuming. And I think then we see a carry to a new 52-week high for sure.
It's pretty insane strength you've been seeing in Zeta. So
it's crazy because it sort of was like a SoFi where it's just a beaten down dog for months on months on months, no matter the news. So I'm pretty impressed to see that it's slowly increasing. And obviously the OpenAI partnership was the big piece.
That was definitely a big piece. But I think also a lot of Wall Street coverage on it. Like, I mean, we're retail. We talk about it a lot. I mean, obviously, everyone's going to talk about their own stocks. They're very bullish on a lot, right? It's like, stop pumping Zeta. It's like, I'm very bullish on it. So what am I supposed to do? Like, not talk about something I'm very bullish on?
Yeah.
It's like, I'm not going to not talk about it. Like, I'm bullish it, right? And we've been talking about this since the mid-teens too. So it's like, now people are noticing, which is good. I mean, it's good to be informative. I do your own research on your companies, guys. Like, don't just buy it because we're talking about it. You need to do your own research. But there's also some other stuff here. Like if you look at the institutional ownership, actually, where was it? Where's that chart that shows?
I think it's right there. It's usually towards the bottom, like towards the bottom middle right there. I think that's institutional ownership. No, I think right where you had it.
Whoops.
That little green chart
here
there,
we
that's
go.
ownership, isn't it? No, above
no,
that.
it's
Above.
call ratio.
No,
This
one more above that one. I think that's ownership now.
Oh, yeah, you're right.
Yeah.
All right, so we have it gradually increasing, which is good to see.
It looks just like it's revenue, honestly. It's like every time the revenue gets a little bump, it's like, oh, well, a little bit more.
I mean, I see you using fiscal AI. So if I pull up Zeta on here, and like, I don't want to say it's a no-brainer, but it's kind of a no-brainer, that the stock's going to do well. Like, because
to me, it's a no-brainer.
I mean, okay, so you have companies that are already profitable, that are already buying back stock, that are already producing earnings, like PayPal, right? But the thing is that there's no margin expansion, or there's no like massive growth or inflection of profitability. It's something to like, give it a catalyst, right? So you'd assume that if the stock is doing the same type of financials that it's expected to do for a long time, then it's not really going to go anywhere because it's already priced in. But when I look at Zeta, I mean, just like the easiest thing right here that I could look at is revenue, right? So this revenue on a quarterly basis is basically up and to the right. And even through, it's not loading.
Weird.
Is it already loaded and I'm just not seeing it? No, it's not loading.
No, it's not loading.
All right, there we go. All right, so the quarterly revenue is, oh, wow. It's not up and to the right. Oh,
these are total revenue changes.
Yeah, I think I need to look at, and I did want to do the total revenue changes. I want to do the last 12 months just to decrease it. Okay, so we're getting there if you look at the last 12 months, right? So last quarter, a little bit of a slowdown, but they are projecting to be back up in the 35% range on a quarterly basis, which is going to bring this number back up. But more importantly, the one that I always look at is the operating income. So you have your earnings before interest and taxes. So if I go over to operating profit, this is the more important one. Like it's like if you see this up, what do you think the next one's going to be? But even if it's not the next one, what do you think this is headed? Right? Like it's just, and they're not profitable from an operating income perspective, which a lot of fund managers and a lot of people, it's like, oh, I don't invest in companies that are not profitable on an operating basis, which makes sense, right? Because it has to show some sort of stability. Management is doing good. Like these numbers tell you a lot, but like, I mean, come on, they're already guiding for it in the next couple of quarters. They're already there on an adjusted basis. So if you reduce SPC,
and it actually would have happened last quarter if they didn't have the Marigold acquisition.
That's true, which helped them guide
to 35% next year.
Yeah.
I mean, this literally looks like a inverse chart of the ownership. It seems like every quarter Zeta gets closer to profitability, more institutions like, okay, we're seeing the vision, we're buying. I mean, it's literally an inverse chart. So and like you were saying, a lot of Wall Street funds, a lot of VC fund, or not VCs, but a lot of Wall Street funds literally can't buy companies that are profitable.
That's true.
So it opens up to a lot more.
I hear that. Let me switch over to the market right now because the market actually is about to close. So we're closing on the S&P 500 at a new all-time high again, up 69 basis points, assuming that it doesn't fall off a cliff in the next 30 seconds. The Qs are like 2% away from its all-time highs, actually, which is pretty good. Amazon's closing green of the day, so that's always good to see. On Semiconductors up 2%. Amcor. I wanted to point out drone stocks. So there's KTOS, there's ONDS, and there's Dragonfly. These things have been on a crazy run lately. And the reason why these have been on a crazy run lately is because Trump basically said he's going to be increasing the budget for defense to $1.5 trillion. And if you look at these companies specifically, they all have government partnerships, right? So if you also look at Palantir as well, actually, is Palantir green on the day? Okay, so it's actually green on the day. It's actually bounced pretty considerably, but it had a massive red day yesterday. But I mean, Palantir obviously has joint ties with the government, especially since like, hey, Trump wants to put a lot of money in technology and AI, and drone technology is like one of the forefront runners of AI integrated with defense, right? So that's the reason why a lot of these drone stocks have been going up. Also, it's a lot of hype, right? But if you really think about like the leader in defense for the US government, it's definitely going to be Palantir. But I think what the market is doing is like, look, Palantir is obviously expensive, right? So I think a lot of this is probably already priced in. And it's very possible that Palantir will not make it 10 times from here, right? Like, I mean, that wouldn't be the worst thing in the world to not get it 10 times after a 20 times. But I do think Palantir is going to do well over time. But people are looking at these other companies that do have these joint government contracts, Dragonfly, ONDS, KTOS. And like, wait, these companies are actually undervalued. Well, it was undervalued. I would say
it was until
KTOS was like $77 just the other day, and then now it's almost double, right? ONDS basically doubled in the last few days. Dragonfly is up like 20%. And this is an interesting one that I'm looking at too, is that these companies are tied in with the government very strongly. And so is Rocket Lab. Rocket Lab is government contracts as well, but it's also part of that space theme. So it's got like that dual secular theme that the market likes. It has government and has space, right? And then if you look at ASTS,
this is another reason I want Android to go public.
If Android
they're going to come in super overvalued, oversubscribed 100%.
I think they're about like probably $50 billion now, because I think the last round was $40 billion. If they come in, they're going to be like $200 billion.
Oh, I would say easily 200, 250.
Yeah, 250. And then it's like, what are you supposed to do with that? It could probably go higher, but Android is probably like one of those things where it's like,
it'll be a Palantir, honestly. It might just stay overvalued forever, I feel like.
It might just stay overvalued forever. It's like definitely a favorite amongst the retail community, and like we obviously can't invest in it. There's just going to be money diving into that as soon as it starts. Also, if you look at ASD Space Mobile, this thing is around the all-time high, right? It didn't hit a new all-time high, but it is at an all-time closing high here, which is good to see. But this has to also do with the space theme, not necessarily the government theme. I guess it does with the Golden Dome, but like not like actual launching government payloads into outer space, which is something like more like Rocket Lab or more like SpaceX. But this is still part of that theme. KRKNF. Someone actually,
I've heard that so many times.
Oh damn!
Kraken Robotics. Yeah.
I don't even know what Kraken Robotics is.
I don't either, but I've seen people post it all over X. It's another one. It's sort of one of those other smaller cap, micro cap retail favorites.
Yeah. Well, I didn't.
Honestly, I haven't been big on the robotics or the drone plays yet. It feels like an ASTS or an Oklo where, again, none of them really have revenue. It's all just some contracts that could happen, which I get. I understand that sort of investing style, but I don't know. I just don't think it's for me.
Yeah, I mean, I am trying to find a robotics play, but I've been preaching for a while. My robotics play just has to
Amazon. I was looking to say Amazon's just the easiest bet ever.
Yeah, Amazon has to be like part of my robotics play, and so is Mercado Libre. And Mercado Libre might not have like the scale that Amazon does, but like they're certainly getting there. And if you think of like real world application when it comes to robotics, so yeah, you have your robotic servers and restaurants. So you have R&R, Rich Tech Robotics, which they basically developed the systems that has the robots within the restaurants that like serve like drinks and whatever, and like spins around in circles and shit. And then you also have, other robotics companies, like SYM or Symbiotics, which is, I think that's one of Walmart's largest suppliers when it comes to building out the robotic warehouses. But then you also have Amazon, which is already integrating robots into its warehouses. I think they're supposed to have like 5 million robots by 2030 or something like that. And Mercado Libre, they're not at that scale, but they will eventually get there, especially with Latin America growing very rapidly. I don't know. These are my robotic plays, right? Like you could have your Teslas or whatever, but like Tesla's completely detached from its valuation. Like it has been detached from its valuation since 2020. So it's very hard to like get in there. But I don't know. My robotics play just kind of has to be Amazon. I mean, there's other companies like GXO, Kraken Robotics, like the other gentleman mentioned.
Yeah, I'm with you there. I feel like Amazon, Walmart, any big distributors where 1% of margin change creates tens of billions in operating income. It's just, to me, those are the easiest plays or like the most guaranteed.
Yeah, I mean, you're not gonna get your like 30 times or anything.
No, God, no. Yeah.
Yeah.
But I feel like Amazon's going to end up, not the drone plays, but acquiring some robotic plays.
Yeah.
So it's just going to end up being at Amazon anyway.
Pretty much.
Honestly.
Yeah. Amazon will not buy back its shares, will not give a dividend or anything. Like they are known for throwing darts at the wall and seeing what sticks, and they've done very good with that lately. You know, there's also Rivian as well, which Rivian is just coming back from the dead out of nowhere in like the last couple of months.
Wow, I didn't really.
Yeah, no, they ever since they released their AI chip or announced their AI chip, they've just been like slowly grinding upward. But I think a lot of this has to do with the EVs coming back into play, rates going down, so people are buying more EVs. But EVs are generally going to be all over the road in like 10 years, right? So in 10 years, there's going to be like, hey, people are still going to buy gas cars, but I'm sure with the price of gasoline, with just the lowered amount of parts that are out there, less gas cars on the road or less ICE cars on the road, it's just generally going to make it tougher for people to have gas cars at some point, which like it's just a no-brainer to switch to EVs since they're scaling out and they're becoming cheaper a lot quicker than versus gas cars. So it's going to eventually happen. And one of the plays that I have that is benefiting from this is on semiconductor, which I've been talking about for a couple months now. And I mean, this has just been like an awesome winner in the last couple of months because, well, one, look at the chart, but also they produce the power chips. They're one of the major suppliers for power chips within these EVs and also AI servers in the US, and it's got the onshoring theme. So like, you know, there's that too. But I mean, really, besides that, I mean, I also have some Path, and this has just been very annoying lately.
Yeah, Path is one I want to look into.
Yeah.
I'm more of like I concentrate, go all in, not all in, but I invest all my money into them for a while until I'm like, all right, let me look at the next name. So right now I'm literally just buying Zeta still. So
are you still buying
Path
Zeta?
is on the watch list. Yeah, I'm still buying Zeta.
Nice.
Here. I still think it's undervalued.
That's good.
Yeah.
I usually set my position like in the size and I just like leave it.
Just leave it. Yeah,
I mean, like if you're not going to.
That's what I do with Nebius. Like Nebius for me is like I'm done buying it. It's too big of a position for me already, so I'm just gonna let it sit there. And I'm not buying anymore for a long time.
Nebius has been like the best performing neo cloud lately, actually, and I mean they are green in the day, but a lot of these stocks are actually very good in the day, and they all faded. Like Nebius faded ever since you posted about it this morning. So thank you very much for that. Corey is coming back. Applied Digital has been on a crazy run lately.
Dude, another one's been on my watch list too.
I did not think this one was going to have a monster run again, but it did. Yeah. I wonder if TeraWolf has been chilling. Like, TeraWolf, Applied Digital, already have that Google relationship. Cypher did.
Core we've been doing. Yeah. Core, I mean, it usually falls paired with Nebius, but
yeah,
flat.
I don't know. I think this has to do a lot with the debt.
Yeah, it's a lot more. It's in like I feel like it's in an Oracle state where it's sort of all the debt concerns are just clouding it for probably the next year, honestly.
Probably the same with Oracle too. Oracle's still below 2. Oh, actually, it's up pretty decent today.
Okay.
But yeah, probably the same with Oracle.
Yep.
But yeah, let me play this video real quick from the Oklo announcement that's on CNBC, and then we're gonna continue on from there. Hold on.
Sweet.
Oh, I don't have one with that one. I was looking at the Steve Hassett one with the tariffs. Actually, I did want to play that one because I did not watch this video, and I was interested because I did hear like the Supreme Court didn't make their decision today.
Dude, I watched the midst for a little bit, and it was like, oh, the decisions today. The decision's today, but the announcement of the decision isn't today. Which is the most ridiculous, like political way to frame it, that the decision's today, so apparently the committee has decided, they just haven't told anyone what their decision is, which is just like, okay, thanks, I guess. Like,
well, the market's probably going to sniff it out way ahead of time.
Yeah.
So I think, I don't know. Let's watch this first, and then we'll talk a little bit about it. And then after that, we're going to move on to the Zeta stream that everyone's waiting for. We'll bring on Wealth Batica, and we'll start it up. So I'll play this for the crew.
Equal, Kevin. I mean, I was hoping to see maybe kind of flat in created equal, Kevin. I mean, I was hoping to see maybe kind of flat in food services, drinking places, healthcare, and social assistance, and we start seeing some good growth in retail and steel, aluminum, the data center, utilities. It's actually the opposite. Now, where is the reshoring? Where is it happening?
Well, I mean, it's reshoring is happening with we've got data on groundbreaking since September. There have been, I think we're at 35 now, big factories that the president has negotiated with foreign companies and domestic companies that have groundbreaking. And the capital spending is looking really good. The orders and shipments of non-defense capital goods, that we used to call it the M3 data back in the old days, that's very strong. And so again, everything is looking like the economy is ramping up at a really, really high rate. And I think that's one reason why markets are so pleased over this year with the progress that President Trump's policies have made. I was in the Oval last night talking with the president, and I was there with the chairman of the Council of Economic Advisors, and he asked us both to guesstimate what GDP growth would be this year if he hadn't changed any policies. And we both agreed that it would be kind of in the ones. And so I think all these things that we've done have really, really, really put, I guess, a shot in the arm to the economy.
Well, I was interested you gave a nod, of course, to Bill Clinton in the 90s. I guess he was doing something right. First time I always like to hear when the Democrats are praised by the Republicans. That's a good call by you. One thing I'm really struggling with, okay, which is that if I hear these 7%, I know we got productivity gain. I'm trying to figure out whether we should take rates to 4.5, 5, maybe 5 3/4. I don't know. You're more likely, according to Kalshi, than I am to be. You're in the Oval, 2 years in the Oval, David. It's an Oval. But I mean, what do we do here with the higher rate scenario that I think most conventional Fed chiefs might be looking at when you have 7% GDP?
Right. Well, the way to think about it, and sorry to be the pedantic Stanford professor that I often end up being on TV.
Well, I'm a hack Harvard guy, so go ahead.
Yeah, I know. So the point is that if you have a village with one apple tree, and then all of a sudden they plant another apple tree, then the price of apples in the village goes down. And so when you have increase in supply, you can have growth, right? The GDP of that town doubled because they have 2 apple trees, but you don't have inflation. And that's what could happen. That happened in the 90s. You go back and look, because computers all of a sudden were modernizing, increasing productivity, every business. Then you saw quarters of 6-7% growth without inflation. And it was really the brilliance of Alan Greenspan that you could have high growth without inflation when you get a really big positive productivity shock. And I think that we've got that happy thing happening right now. And so therefore you can have high growth without inflation. Of course, it'll be really, really important for people at the Fed to monitor it and make sure that that story holds. But we're seeing it in the data for sure that we've got really, really high growth and we don't have accelerating inflation.
All right. So I think him becoming the Fed chair is obviously very dovish. The question is that going to be bullish, depending on how things turn out? But he's like the opposite of Jerome Powell. He's smiling all the time. He could be like, we're going to hike rates 5%. And he's got a big smirk in his face. It's like, dude, I don't know if I trust this guy, that sort of thing. But we'll see. I mean, make the market pump and I'll be good to go.
Yeah, I'm with you. I think it'll be interesting. It's also interesting the fact that he said that, the economy is going to grow without inflation. Yeah. Typically, it's pretty hard to find an economy that grows quickly without inflation also growing pretty quickly with it. So I want to see it to believe it. So I don't know if I believe that yet, but I'm curious to see how the next 2 years turns out in terms of, 5% GDP, but apparently 2.5% inflation.
For sure, man. For sure.
That'll be interesting.
Trump is actually live right now, so I wanted to play this real quick and see what's going on here. See if it talks about anything special.
The oil, and it came out of that port, but Russia would be there or China would be there, and we want them to be there for a different reason. We want them. Do you people agree? In particular, China, they need a lot of oil. Russia doesn't need so much, but Russia was there anyway. But I assume you agree that China would like to be doing a lot of business there by buying oil, and I want to just tell President Xi and President Putin, but more so in this case, President Xi, because they do need a lot of oil, and we are open for business in the United States, and we are open for business in Venezuela, right? Go ahead, sure.
Mr. President,
you know, I could take questions from these people all day long. They're sitting here, and generally they're very rich, very powerful, but nobody gives a damn about them. It's a sad thing. You have all that money, all that power, and look at all these crazy questions. We could do this all day long and they wouldn't be satisfied.
I have a question on today's meeting, Mr.
We'll
President.
take a few more,
I have a
though.
question on today's meeting, Mr. President.
Do you have? Let me ask you more importantly. Do you have any questions from the biggest?
Yeah, sure.
Hold it. Do you have any questions for the biggest people on earth, the biggest business people, the biggest companies anywhere on earth? Do you have any questions for these people? No. Do you have a question for them? Go ahead. Go ahead. Ask them a question.
To rebuilding the oil infrastructure in Venezuela, and for the executives in the room, what do you need from the administration in order to invest?
That's a good question. Do you want to go and answer that question?
Yeah,
Exxon, small company.
I'll refer you back to the statements I made before. There are a number of legal and commercial frameworks that would have to be established to even understand what kind of returns that we'd get on the investments. So I think all the investments and the opportunity sets, I think everyone sitting around this table would have the opportunity and the know-how and the capability.
All right, nothing really too interesting going on there.
Yeah.
I don't think
gas
it was,
and oil in Venezuela.
yeah, just gas and oil. They're not talking about Zeta. They're not talking about AI. It's such boring stuff. No, it's actually pretty funny because like during these press conferences, they always ask them about like China and like how things are going to impact the stock market, and like people just generally don't care about oil. But if you look at energy stocks have been just ripping higher every single day. So it's like they're kind of important too. But anyways, all right. So let's see if Wealthmatica wants to join us a little bit early so we can talk about some Zeta here. We did talk a little bit about Zeta earlier today, but I'm going to shoot him over a message to see if he wants to join up.
I sent him the link if he wants it.
Oh, you sent him? Yeah, I already sent him the link too. Oh, he said join in a few. Okay. All right, I'll wait for him to start that one up. But I didn't play the Oklo stuff as far as that partnership goes. So this is actually pretty interesting seeing this partnership. We're going to continue seeing a lot of partnership when it comes to clean energy going straight into data centers, especially with Meta, with Prometheus. I mean, this has been happening for a while. Like Microsoft is the one that started this movement like less than a couple years ago when they had the joint partnership with the 3 Mile Island and Constellation Energy Group. And since then, like it's really been picking up, right? But I think there was that hype that we had for a minute where a lot of the energy, or a lot of the nuclear stocks, specifically Oklo, NNE, SMR, and all those other companies, like they were just ripping like to the moon. And
I remember when it was $12 a share. Now it's 105. I mean,
yeah. I remember, Oklo was like $24 a share. I remember, and I'm just like, oh, this thing's gonna go back to like single digits, right? And it's $120 this morning. I'm like, and I remember when it was $160, and I had a swing trade on it, which I obviously sold too early. It was just crazy.
It's an $18 billion company doing zero in revenue, and Zeta is $5 billion.
I know. Some of the stuff just makes no sense, but
no.
I mean, that's what the market does. That's what the market does. So we have Mr. Zeta himself joining. He's in the backstage. Just want to give him a second to be ready. I think he's ready. He's ready to go. All right, let's bring in Mr. Zeta. Let's go.
Hey guys, how's it going?
Welcome.
I think this is my first live stream on camera, so this is
okay.
This is a day to remember.
That's cool.
I'm in good company, I think.
Yeah, I hope you're in good company. We're about to find out you're in good company.
I would agree.
In about like a few minutes here with this 33-minute. I've never watched the interview. Did you watch the interview already?
Oh, with Dan Ives?
Yeah,
I did. Yeah.
Okay. Were you there?
No, I wasn't. But you know who was there?
Davis.
Davis was there. And Davis said that the interview actually went on maybe like another 40 minutes after they officially released. And he asked a series of questions himself. So I think it would be a great opportunity to get Davis on eventually and ask him a couple questions.
That'd be cool.
You know, what he experienced and what the vibe was in the room, especially after you guys are going to see it here in a minute, but somebody reaches for a cookie and puts it back on the plate. It's quite funny. So
that's funny. It's like a little Seinfeld humor there. Yeah. I don't know if you guys watch Seinfeld. That's probably.
Oh yeah. I watch Seinfeld. Come on.
Oh, dude, I feel like an old man.
My girlfriend's from the Northeast, so it's like ingrained in her family. So I watched a lot of Seinfeld. Yeah.
There was an episode where George, one of the characters on there, he dips a chip with the salsa in a party, and then he dips again, and like some dude sitting in the back like catches him and like makes such a big deal out of it, and like they end up getting to a fight. Yeah, but I guess it's like the same thing with this one, but it was probably out of good humor, but that's actually pretty funny to hear about that one. All right, so for anyone who doesn't know, Wealthmatica or Nick, he's been all over Zeta for some time. How did you get the name Mr. Zeta, by the way? Is that just what
just calling yourself?
No. It was there was a guy, his name is Tactics Hazel. And
okay.
Yeah, you know who that is, right? And I think it's also Mindset for Money. These are two guys on X, and they're big into all the stocks and whatnot. And they're constantly posting content. And these were two guys who interacted with me before I was even verified, with maybe 600 followers. And I was hammering the table about Zeta for so long, and they kind of, uplifted me and whatnot. But they kind of coined that name, Mr. Zeta. They said, okay, remove whatever you have in your bio. You have to put this in right now.
That's good. So like, what concentration of portfolios in Zeta?
I got about 22. Actually, let me check right now. As of yesterday, it was 22%.
Billion? Damn. Oh, okay.
He's got the whole float.
The whole float?
Yeah. In fact, he's got private shares too, because he's $17 billion over the valuation. So like he owns a little bit more than that.
It's almost 23% of my portfolio. But
that's good.
Yeah, I'm happy to buy more here. Honestly, it's extremely undervalued. Everybody's saying, "Oh, it's run too far." No, they have no idea what they're talking about. Sadly.
Yeah. Yeah. I mean, even if you look at it from an EV NTM sales perspective, which is really how you value a lot of software stocks. I mean, they're like a rule of 51, I believe. Even on their terminal free cash flow margin, like they're going to probably be like a rule of 60 or something like that. But even from then, like we were just looking at some charts earlier, you're probably watching. It's like they're inflecting on operating income profitability. They're going to be profitable soon. And yeah, they're not a profitable company. So I know that's like a case for a lot of people, but I mean, if you look at these charts, like it's going to be there. And Nate was a heavy investor in Palantir, and he was there during that profitability inflection. And we've seen it with SoFi. We've seen it from a lot of these retail favorite companies. And I mean, I hate to be like talking so much about quote unquote retail stock, because it has such like a large following now. And I think it has had a large following for quite some time, but lately it's had a much larger following. So it's like, oh, this is a retail stock, so it's going to go down. And it's like, well, I mean, I still think it's undervalued. Like if I look at HIMS, because I remember people were saying HIMS is undervalued, which it still is, right? But I think it's a little bit different than HIMS, mostly because HIMS, I think, is a software company, mostly a data company. So they have a lot of data, but like there's a bit more than just releasing software for companies when it comes to Zeta, right? I'm sorry, when it comes to HIMS, there's medication, there's selling the medicine on their website, there's negotiations with other companies, sell the medicine. Like there's a lot more to deal with. So obviously but I mean, HIMS will probably be $100 stock at some point, but like right now it's like the market is honed in on AI, right?
Yeah, 100%.
And Zeta has done a very good job at marketing that, but also they've done a really good job, even for the management standpoint, of one, keeping SBC under control, which is not something software companies naturally do this early in the stage, but also inflecting your profitability, which again is another thing that software companies usually don't do it this early in the stage as well, while still growing at 35% plus next quarter or next year.
Yeah,
right?
and that's sandbag too. You remember, like this is a company that consistently sandbags all the guidance they release on average. So I ran the numbers recently because back when they made the Marigold acquisition, or at least there was rumors of it, I knew the guidance that they gave was complete BS, right? They were just giving us some sort of baseline, so they knew when they actually give the Marigold revision, we kind of knew what the organic revenue growth was, and then what the acquisition revenue growth was, where it put the top line. Even after they released that, it's sandbagged to hell, man, honestly. So on average, they beat all their top line, the midpoint guide. On the top line, they beat it by 8.6% every quarter. Right. So whatever they guide for on that midpoint, whatever you expect, they beat it by 8.6%. That's the average. I ran projections where I took their Marigold guide, where they revised their top line target from 21% year over year growth next year, or I guess in 2026 this year, to 34% year over year. I took their guide and I broke it down. They guided for zero growth to Marigold Enterprises. Zero. They guided for the exact same number they're going to do this year for next year. And you got to keep in mind, Marigold, before they acquired the enterprises, about 2 years ago, they went through this massive breakup and they partitioned the business because at the time, Marigold ran their business where they had small business, non-enterprise customers, and then they had enterprise customers, but they commingled in the same ecosystem. It's very hard to sort of delineate what revenues came from where, what earnings came from where. So what they did is they separated everything. And this is what was so attractive to Zeta, and this is why Zeta actually acquired them. What ended up happening when they did that, you could clearly see that the enterprise revenue started to scale quite aggressively. And right after they did that restructuring, obviously revenues on both sides of the table kind of dropped, and they plateaued around like 4%. But then a couple quarters ago, Marigold reported, from what we could see because it was a private company, an uptick of another 2%, a quarter after that, 4%, a quarter after that, 6%. And they started accelerating that top line growth, which is very attractive. But the funny thing is, Zeta's management guided for no growth. And I was like, no, you know what? Like, they're being very tactical here, because you got to remember, this is a company that has 17 consecutive beat and raise quarters. It's not like, Mercado Libre, where Mercado Libre has beaten, I think, was it 27 consecutive quarters? But they haven't raised every single quarter. Zeta's in a different class here, right? There's 17 beat and raise. So it's quite a tall order, but they know what they're doing.
Yeah, 100%. I do think it is smart by the management team to guide with 0%, because when you do acquire something like that, there is a lot of culture change, a lot of friction, a lot of customer turnover, I'm sure, a lot of different teams merging and a lot of change there. And so there can be a growth slowdown, but the guide for 0% is, extremely conservative, to say the least.
Yeah, it is. I actually wrote a thread on this a couple months back. I think it was in December. Yeah, December 26th. I wrote a thread on this and I broke it down and ran all the numbers and my projections. So I didn't take the average beat by, I think it was, let me find it here. It's like 8.6%. Yeah, 8.6%. I didn't take that number. I took the midpoint. I put 4.3% beat on the top line. And I added roughly 6% growth for Marigold, and it put them at 40% year-over-year growth. And I was like, holy cow, man, this company is extremely undervalued. So imagine this, a couple catalysts, right? So we had the Athena announcement with OpenAI. That partnership, check. That's catalyst number one. Number two, we get this legal/short report busted and tossed out. I highly doubt it's actually going to go to court, or at least go to discovery. And if it does, I think it's going to be settled out of court. This is quite common. And you got to remember, companies like this have insurance for these sort of things. Number three is GAAP profitability, as Nate kind of alluded to. I was just tuning in before I hopped on. You guys were talking about profitability coming up. I think it's highly likely we do get GAAP profitability next quarter. I do have to run the numbers and just really crunch them to see if there's anything left over in terms of expenses from Marigold, that acquisition, that would trickle into Q4. But I think it's highly likely. Keep in mind, if they didn't have, I think it was roughly $6 million in acquisition expenses, they would have been GAAP profitable this past quarter, which is quite interesting. The CFO, Chris Greiner, mentioned that actually in the last call. And then lastly, imagine if this is the fourth catalyst, this is sort of the wild card. If we, I see him in the background. If we achieve a top line beat of about 6% plus from guide, that would be immaculate. And the stock would have a massive re-rating.
100%. And I think David, as a founder who owns 10% of the company, I think he has 10% of the float.
Oh yeah, he's got a lot of skin in the game.
And understands the sentiment matters. He understands that now they get Athena. They dropped that in November or September of last year. OpenAI partnership in January. He knows the next sentiment piece that he needs for the company to hit a metric is GAAP profitability. And so I think as a leader, he's going to do everything he can to make sure this quarter is profitable. And I'm betting on that. Because sentiment is a big part of investing nowadays. I think it used to be, back in the day, all about numbers and running the Excel models. But now it's a lot about sentiment. And I think as a founder and someone that owns, around 10.5%, he's going to want more money. And so he's going to play the game of the next sentiment piece is profitability. 100%.
Yeah,
for sure. I mean, even Vanguard, they own a lot of companies, right? BlackRock.
Vanguard owns the whole market.
Yeah, I mean, they own so much of the market. So I wouldn't really read too much into these, but they don't generally own like every single company on the market. But usually the ones that they hold on to for a while, those are the ones that they end up doing very well on and so on. I haven't actually looked at the recent trades lately. It doesn't look like there's much going on here.
No. Well, what is actually happening? Some people took some websites highlight some of the actions a little differently. What David's doing is he's moving a lot of his personal holdings into a family trust, and it's coming up. It looks like sales, but in reality, what's happening is he's just flipping it over to that trust.
He's selling from one and moving to another.
Yes,
yeah.
correct.
Yeah, that's what I saw over here, and I was just like, "Ooh, that doesn't look good." But I mean, even if it's 1%, it's like, well, you got to pay for your bills at some point, right? So it's like, if this was down like 10%, like Vanguard, I'd be like, "Oh, why is the CEO doing that?" But no, it's certainly nothing really to worry about.
This too, right? Optically, it makes no sense for anybody in the corporate structure, even on the board, to sell shares while you have a lawsuit against you, right?
Yeah.
In fact, back in November, back when the lawsuit actually happened and the short report was dropped, everybody just bought shares in a show of confidence, and then they started this massive buyback program. I mean, it was smart of them too, very tactically inclined to acquire a bunch of shares when the stock was trading dirt cheap. That's how this stock actually caught on my radar. I have like a little screener that I've set up, which tracks some key fundamentals and references some of the price action, and it flagged Zeta back in November of 2024. And I was like, this is interesting. Okay, I don't really have much color about this situation given the circumstances. Let me look in the short report. Let me see what the rebuttals are. And then eventually, Deloitte released their report and their findings, corroborating everything Zeta was saying. And at that point in time, it was sort of like late winter, early spring 2025. And I said, you know what, let me start a position. And that's when I really started accumulating and building that conviction.
Cool, man. So let's let's start playing this thing up. It is a 33. Hold on a second. Where did it go? I had to open another window. Let me just get the.
You're losing all these tabs, man.
You know what? Yeah, I have a lot of tabs.
As an IT guy, you got to figure out these tabs, dude.
Yeah, man.
Well, listen, as an IT guy, I know where each and every single one of these tabs are. So I wouldn't really say that. But I usually end up closing a lot of tabs anyway. But I guess I don't know, when you have like 120 people on here, you get kind of nervous and whatever. So you end up leaving. I don't know, just saying something. But anyways, let me get this show on the road over here. And this is this is 33 minutes. So I guess we'll probably stop in the middle if we want to talk about something real quick. But other than that, enjoy, guys.
Obviously, we announced our major partnership with OpenAI last night. We're super excited. My main man, Nate, who's here, who joined us after years at Meta and Microsoft and the White House, came in and really championed that deal and helped us get it over the finish line. So we're very, very excited about that deal and what we're doing as a company. But to me, the most interesting thing to happen to me in quite some time was the first time I got to meet Dan. And this is true, because if you look at Dan and you look at me, you probably don't think these two cats are going to meet and become like best friends. We have different personalities. I dress a little more fashionably than Dan does, but we'll forgive him for that. And we were introduced, actually, quite frankly, pretty recently, and we've hung out a bunch of times since then. But the first time I met him, I was just blown away by how much we had in common and how, quite frankly, smart you are. Just really seeing around corners, understanding. I know it's very unusual for me to be nice to anybody, and you're probably, I tease everybody. But, the truth is, he really is a legend. And he's been working with me on a whole bunch of stuff and helping me to get smarter about a lot of things. So when he said we should do a fireside chat at CES, I was like, yes. Yeah. So it was great. We have prepared effectively no topics. We've prepared no notes.
Zero.
Come on in. I was gonna pick up a matching jacket, but they didn't have it in my size. But in all seriousness, Dan, thank you so much for being here tonight.
No, first of all, thank you so much for having me, and thanks everyone for coming, everyone that's watching as well. Look, I mean, I'm so excited because for me, covering tech since late 90s, I love finding tech companies where they're doing things that are special And I think a lot of the investors don't even understand what's really happening. I think when me and you started talking, really digging into what Zeta is doing, and especially in the AI revolution, I'd almost say at the centerpiece of the AI revolution, but yet so many investors not recognizing, obviously OpenAI, and we'll talk about that, a huge step there. But I think I'd start there, like walk through, a lot of times people say, are you an AI company? To any tech company, are you AI? Just because you have AI 30 times in a PowerPoint, or you say it 30 times.
I remember when AI first hit, and people always ask me, what was the seminal moment? And I always say the launch of ChatGPT, right? Because that was the day that AI went from science fiction to boardroom conversation. The next 2 quarters, we would play drinking games at Zeta. How many times people would say AI on their earnings calls? The problem was we were faced halfway through the calls. But to your point, everybody just pivoted to the narrative of AI very quickly.
And to that point, let's talk about Zeta and just really understand for people that don't follow it as closely. When we talk about data and at the epicenter, where you guys are, because I could argue to some extent you've been doing AI really from the beginning. If you actually start to think about it, could you just connect the dots, like right there?
Yeah, I mean, so we started 17 years ago on the premise that controlling very large pools of first-party data would become very valuable. We then moved into automation. Then it became machine learning, and we were doing very complex machine learning. And then in 2017, we really pivoted the entire company. We figured out what most people don't understand yet, which is putting an AI module on top of an antiquated platform doesn't actually work. And what we had to do at the time, Dan, you would have loved this. So we have 2 big private equity partners. I go in, we're making pretty good money at the time. We called ourselves a customer lifecycle marketing platform at that time, where we would do acquisition and retention and so on and so forth. I went into a board meeting and I said, well, guys, we're going to go from making, pick a number, 50 million a year in EBITDA, which was a lot of money back then. Now it's a good month. And literally, I told them we're going to make no money for the next 3 years. I'm going to take 400 full-time engineers, and we're going to re-architect our entire platform to make AI and data native to the application layer, so foundational.
How much silence in the board, like when she said that?
Silence. Like literally, I would tell you, and you know me well, those who know me really well, I'm really about consensus as an individual. I started my first company when I was 16. I was the youngest guy in the room for the first 20 years I ran companies. I am now universally the oldest guy in any room I go into. And to me, it's sort of like, well, I'm happy to have Brian here, or Barry here, because he's older than me. But the reality is that I sort of say the truth lays in the middle, right? So we went into this board meeting and we had no consensus. We had one side that was really upset. Another side was like, listen, we can do this. And I told them, I said, listen, we're never going to become the company we want to become unless we do this. Because the way I saw it in 2017 is we were at the time ingesting so much data that to run a comprehensive report would take days. And we needed an answer in a millisecond. The math didn't work. Now we're probably ingesting, 10, 20 times more data today than we were in 17. And we're able to process, millions of data points and come up with a solution and an answer in a millisecond, which is really how we've made this leap to return on investment for our clients, right? Because if you're not able to bring in the right amount of data, how do you know who to serve which advertisement? How do you know who's likely to churn? How do you know which message to generate to which person?
Well, to that point, like it goes back to your journey to where we are today. And obviously we'll talk about Athena and talk about OpenAI and everything. But now, like when you're here, 30, 40 meetings, constantly meeting with customers. Now, walk through, like you walk into a customer, you walk into a CIO. What is it about Zeta, the actual, like the mousetrap, the secret sauce that separates you?
Well, first of all, let me start by saying when we meet a new prospective client, I say to them, for every dollar you spend on our platform, I will return you between $6 and $7. That is off the charts. Our average competitor is less than half that. But we aspire to 10 times, just to be clear, and we think Athena is going to help us get there. But I start with that because if you think of the marketing ecosystem, Dan, it's really interesting. So you've got this whole funnel, right? You've got this marketing funnel that's been used forever that goes like that. And very large enterprises start at the top of the funnel because they need to. They're really big and they need to really drive velocity into their business. And then you have all these insurgents who start at the bottom of the funnel and they're really focused on performance. But what happens to them is they start getting bigger because they're winning. And then all of a sudden, the bottom of the funnel is not driving the velocity, the growth they need. So they start to move up the funnel. And then the big guys are trying to move down the funnel. And everybody ends up in the middle. So this middle funnel for marketing is where Zeta really thrives. And it's white space for most organizations. And if you think about it, our ability to drive a massively superior return on investment to our competitors is what fuels our business.
And especially when you think about the intersection now, marketing and AI and where we are, and maybe even talk. So let's just talk about OpenAI partnership, obviously announced last night.
Yep.
So significant. Talk about how that is maybe a game changer for you guys going forward. And then we'll start there.
Yeah, I mean, let me start by saying we think that OpenAI is going to be the definitive company of the artificial intelligence generation. I wouldn't sleep on Google, but I think OpenAI is going to be the pure play definitive. So to be able to do a partnership with them was really exciting. For us, this was about how do we get to true native with OpenAI? How do we put them at the heart of Athena? And the only way to have done that was through a partnership, because we're not like buying their API. Like we've literally merged this together, and they are going to become foundational to Athena. Which, by the way, as we roll Athena out to all of our customers, will fully integrate into everything they're doing with OpenAI.
Well, and that goes to the step process, right? I mean, Athena actually when it's launched, when she launched. Now OpenAI. I mean, I imagine like every customer conversation that you're in, Athena has to come up.
So I will tell you, we did a series of demos today, and we have Roman, who's on our team, who's really, really exceptional. He helps to lead the work, and he does the demo really well. I walked into 3 meetings today. Every single person was like, "This is going to change the game." And if you look at the quote from the UFC, WWE people, they've been using it. We have a lot of clients. We called it our special access program. So Athena is being used by clients today. It's now in full beta, and it'll be fully available by the end of this quarter. But everybody who's using it is just blown away by it. And one of the things I think a lot of people do not understand, and how were we able to develop such a comprehensive conversational platform so quickly?
Because I think that is a big question, right? The question is like, oh, well, okay, we're going to launch this, they're going to launch this. Why with Zeta?
Yeah, everybody's like, who the hell are you and how did you do this, right? A lot of it goes back, like when we started with AI in 2017, when OpenAI launched, it went from, that's when AI went from science fiction to boardroom conversation. So every board of directors is asking every CEO, what's our AI strategy? Every CEO is asking every CIO, CTO, CMO, what's our AI strategy? And we were there. So if you look at our business, our growth rate is substantially higher over the last 3 years than it was in the 3 years prior to that. at scale. And a lot of that is because we had built the products that worked. So let's go back to
organically.
We built it all in-house. What I would say is, why are we able to build a conversational super agent when other larger enterprises are still on sort of version 1 of their agentic platform? Goes back to a product we built 2 years ago called Zoe. Zoe was a conversational interface, a voice interface that allowed our clients to talk to the platform. Now, I joked it was like using an old, CB radio. You'd say, Zoe, what does my platform utilization look like today? Over. And then Zoe would talk back and you'd have to wait. And if you talked at the same time. But here's what we saw. First of all, we started the UI early around voice because we do believe that conversational AI is going to remove the friction between the consumer and the platform. And we believe that voice would be one of the killer apps for quite some time. The other thing we saw, Dan, which was really interesting, customers who adopted Zoe spend between 200 and 225% more on our platform than customers that didn't adopt Zoe. So I'll give you a great situation. I was in with a multinational enterprise today. We're going through it. They're literally asking questions. They're blown away by it. The woman is looking at the poor sales rep who's sitting in there trying to pitch her on it. And she's like, well, what is this going to cost me? And I guess bad on us, he didn't know. So I looked at her and said, it's free. And she was like, wait, what? You're telling me you're going to give me this for free? I said, yes. And I'm telling you that once you start using it, you're going to spend 300 or 400% more on my platform.
That's the key.
But why? And we fight about this. So internally, there is a contingency of people or contingent of people who want us to charge for this.
Sure.
And I'm the guy saying no. Because if you think about it, so what am I going to charge? Let's say I charge $99 a seat, $500 a seat, whatever you charge. So this year, at the middle of our range, I'll round here, we'll do about 1.25 billion. We've already told the street we think we'll do 1.7 billion next year. That's our first announcement. And the reality is we've beat and raised 17 quarters in a row as a public company. How much can I drive the needle at $500 a seat?
Because it's a seeding strategy.
That's it.
I mean, that's at the core.
That's it.
When you think about Athena, it's a seeding strategy. And with OpenAI, I mean, this is really now putting you on, it's really on the global map as a seeding strategy to, when you think about data and where everything's heading, that you are now at the epicenter.
Right at the center. And when I told her that, she was like, how fast can I get it? And I think what we're going to see is, I believe we're going to continue to grow this company on a compounded organic growth rate of greater than 20% for many years to come. And I think, we've already done it, I think 5 years in a row, maybe 4. I don't know. There was a little blip in COVID. If you take COVID out, which we grew that year, it's many, many more years than that of 20+% organic compounded growth rate. I think Athena is going to continue that at a minimum for many years to come. Not because we're charging $500 a seat, but if you look at our business, last year our net retention rate was 114%. How do we take that up? Yeah.
And what, so far with the beta program, or what so far has surprised some of these customers? Because you obviously have a who's who Rolodex, everyone. So as you've talked to some of these, what's been the feedback that's maybe surprised them?
The thing that surprised people, and quite frankly me, is how easy it is. Everybody's at first I thought it was going to be really complex. Was I going to have to learn certain prompts? Was I going to have to roll into it? The customers that are on beta have a little diamond type thing, right? It's a little diamond in the upper left-hand corner. They click the diamond and Athena just says, hi.
Yeah.
And you just start talking to it. The other big differentiator that confused people at first is when Athena answers your questions, it gives you the answers in the platform on your screen in real time. So Athena's not just giving you answers, she's actually doing all of the inputs to the platform to get the output that is the answer so that you can visually see it in front of you in addition to being told the answer.
So let's walk through like that example. So let's say like I'm a customer, I'm a Zeta Global, I get Athena, now I start using it for free. Let's walk through scenarios in terms of like cross-sell, upsell.
Yeah,
like,
that's where it's big.
So give me like just some, high-level examples of like, I'm a manufacturing company.
Yep. Well, let's say most of our customers are facing consumers,
yes,
right? So let's go with, you could say to Athena, I would like to lower my marketing cost by 4%, but increase the number of customers I'm generating by 17%. How would I do that? And Athena will give you the answer on the targeted audiences, how you would activate to it, and how you would do it. You could then say, Athena, please activate to that, but I'd like a report every hour on the return on investment emailed to my inbox, because I might be out and I might not have access to the UI. But every hour you're going to get a report. Now, here's where the cross-sell begins. Athena can then say to a customer who does customer acquisition, by the way, I was looking at your existing customer base, and it looks like these 2.2 million people have tripled their likelihood to churn based on their online usage patterns over the next 90 days. Would you like to save them? And you've just gone from one use case to one Zeta, which is our multi-use case strategy. So today, for us to sell a one Zeta customer, we come in, it's a big strategy conversation. Sure. It's how do we start the flywheel where the data that informs customer acquisition informs retention, which informs monetization, which in turn informs acquisition. Sure. Athena cuts through all of that with real world answers.
So let's talk about like regulated industries, right? I mean, that's like such a...
Well, and that's what we're excited to work with you guys on, right? So, what you guys are doing, and I know Kevin's here, I think.
From Orbs. Yeah.
From Orbs, this whole concept of AI is going to do everything is great. And we're all in on it. And we believe ultimately agent to agent will be what happens, except in highly regulated industries. You look at health and wellness, you look at financial services, you look at insurance. Our clients, which are some of the biggest players in the world in that, are currently challenged with their regulatory environment as it relates to automation and AI everywhere, which is why we're partnering with you guys to help oversee that and have a human help from a regulatory perspective in those industries.
Yeah, and I think from our perspective, we're so excited, at Orbs, because with all the other enterprise companies that we could have partnered with, you're really the only ones in the sweet spot that makes so sense for this, to really go after the industry. Because to some extent, you've talked about it, like when you think about Athena, and
you're literally pointing at it when you say that. That was great.
And I appreciate the color.
This is the Don Ives hat.
Because I will tell you, David, he had phenomenal trucker hats when Athena came out. And I'm like, David, these are unbelievable, but I'm just not going to wear came out with the pink one, so appreciate it. So when you think about industries and you look at Athena, let's talk through there's so many opportunities. How do you sort of segment it? When you think about for those to sort of look at your traction in 2026, what are the industries specifically that you're kind of salivating, being those are the ones that we are really going after?
It's interesting. We operate in 15 approximate verticals. No one makes up a disproportionate percentage of our revenue. And I sort of always joke that in any year, one or two of them might not be doing great. 2 or 3 of them are hyper scaling and then, sort of growing. We've really been scaling across greater than 10 verticals over the last couple of years. And I just think that's going to continue. I think as it relates to AI and as it relates to Athena, I think the more complex the sale is, the better our platform can deliver.
Interesting.
Because
can you just dive into that?
Yeah. So if you're looking at somebody who's trying to buy a bar of soap, I mean, we love consumer packaged goods, but it's not going to be our biggest vertical. Sure. But if you look at financial services, which obviously we're doing together, and you look at insurance, and you look at health and wellness, and you look at automotive, and you look at retail, these are incredibly complex sales.
Sure.
Because even if you just look at automotive, which is one of our bigger and fast, it's a fast growing vertical. If you look at automotive, you've got a manufacturer, you've got a dealer, you've got regional marketing, you've got national marketing, but most of that marketing, if you really want to be successful, has to be hyper local. Because the average person's not going to drive 25 miles to go buy a car. They want to drive 5 to 7 miles to buy a car. Our platform is able to segment down to a concentric circle around a dealership of 5 miles, 3 miles, 7 miles, 12 miles. It's totally dynamic, and it'll constantly be testing how far out can you push that circumference to continue to drive the maximum return on investment. And then I really need to know if an individual is looking for a white convertible or a blue minivan. And the marketing is literally customized to that level.
That's what it really feels like. I think a lot of times, whether it's CES or just across the board, companies will talk about AI, but you're like, after they talk about what they're doing, it's even more confusing.
Right.
It really feels like it's very tangible what you're bringing to the customer. Like you're not going to walk out of a half-hour meeting with the CEO at CES being like, what do they even sell? It's very direct in terms of what you're selling and what the ROI is.
Yeah. And by the way, we exist in a world where marketing is moving in our direction. Everybody is looking for return on investment at this point. So not only our ability to deliver meaningfully higher return on investment than anybody else I know of out there, but we're able to prove it. The attribution capability is amongst the most important things we deliver to the client. And the crazy thing is, it gets better and better because let's talk about our agentic AI for a second. We're one of the very few companies I know of that has already strung 3 agents together into one agentic workflow. Most of our competitors are still trying to figure out one.
Yeah.
All right. So what does that look like? We might have one AI agent that is going through every one of your existing customers and in real time looking at the 242 million people in our data cloud and saying, who's doing those exact same things? Then it's going to say, can that person be credit approved for their product and can they afford it? So you're removing all of the waste before you even go into market. The next agent in real time knows the best place to target that individual, whether it's connected television, what portals they actually don't just go to, but they transact in, should we be sending messages? And then to me, the coolest part is we have a real-time third AI agent who's doing attribution and informing the first 2 what worked. So you can look at clients. We have some clients that we started with, we were able to lower their cost to create a customer by 50%. 5 years later, that same client, we might have lowered their cost to create a customer by 386%. Because it just keeps getting smarter.
But Athena is going to keep making that smarter and smarter.
Correct.
So I could argue, like, if your flywheel is like this, it's gonna, by definition, won't it keep going? I mean,
not only does it open it up, it opens additional addressable markets. Because clients who would not be capable of using our platform today will be able to seamlessly use it. So I sort of joke, one of the things about enterprise software today, and whether it's us or it's Salesforce or it's Adobe or it's one of the other guys, we're all building 747s. We build these massively complex platforms, and our clients want to fly Cessnas. Sure. Which is not to say they don't want the comprehensive stuff, but I sit in meetings where the bells and whistles were put into this platform. One of our 572 global enterprise clients might say, that's interesting.
Yep.
But by putting Athena on top of it, you're effectively allowing for a self-serve automation.
See, that's the thing. I mean, I'd say like part of how like our affinity we become like really good friends because it's also
it's not how I dress.
First of all, I love, and you're actually kind of like a under the radar fashionista as well.
I try.
But the thing is that you look at things, you've done for decades and decades.
God, now you're making me feel really old.
But in terms of working with corporations, work with CEOs, work with CIOs, but yet you look at things very simple. It's not buzzwordy. It's not like. You're not like acquiring like 20 companies.
Take a bite and put the cookie back. What's wrong with you? He literally took a bite of the cookie and put it back on the cookie tray. Nobody wants your half-eaten cookie.
That's a Costanza.
I don't think That is a Costanza moment.
It's a Costanza.
Did you double dip your chip?
Hun, did you?
I can't believe you just put that back.
Dude, I'm astounded.
You just said that.
They literally just made the same reference I did. That is funny. That's funny.
It was a troll to your efficiency.
All right.
I
interrupted a really nice compliment about me because I'm very uncomfortable. As a New York Jewish person, we're very uncomfortable with compliments.
And makes too.
Because like our parents have never complimented us.
But also, when you find double dippers or Costanzas, you have to call it out.
I mean, he literally put the cookie back.
No, it's going to go viral.
No. Okay, so we're gonna. That's a separate. We could do a separate podcast on
cookie replacement.
But the thing is, like, you look at things very simply and like no buzzwordy, and especially in this AI world, like when you walk around CES, right? Like we're talking about fourth industrial revolution.
Yeah.
But yet you keep things very simple, and you don't get into this buzzwordy and you're constantly acquiring companies after. You could just walk through that philosophy, which is. I find refreshing.
Well, I wish I could take credit for it. The credit goes back to a guy named Fryman, who was and the internet might kill me on this. I don't remember his exact background. I know he was a physicist at Princeton, and he was on, I believe, the Manhattan Project. Fryman was sort of one of the most brilliant human beings to ever exist. Years ago, I read a book about him, and I think it was called Surely You're Kidding, Mr. Fryman, or whatever it was. It was the book he wrote. But his whole premise, and it's now many people call it Fryman's theory, is if you can't explain something to a child, you don't understand it. And that just hit me. And it was like, interesting. So for me, I don't sleep a lot. I read a lot. And I try to really understand things before I speak about them. I can't say I always can. We all sort of have to come up with stuff off the top occasionally. Right. But the reality is, for me, this journey started around AI back, almost 10 years ago now, where I began reading papers about it, which really meant going into white papers from universities and really starting to understand what was coming down the pike as it related to artificial intelligence. And, it's as big a compliment as you could pay me to tell me that I'm able to explain things simply. I appreciate it.
No, and ironically, like in this world of AI, I think only in the last few months have investors maybe connected dots relative to like you being an AI company. And I'm sure we've talked about it, like you're seeing so many other companies, investors are so focused on like AI growth, yet it's almost like you really were there before many others. And now to some extent with Athena, it's really going to be able to help you monetize as well as kind of like, I think reputationally too, show like, look, we were kind of here first.
Yeah, I agree. For some reason, we got no credit for being an AI company for quite some time when we were one of the forefront companies of it. Now, maybe that's our fault. Maybe we didn't scream it loud enough. Maybe we weren't out there talking about it.
Or you didn't have pink hats.
Right. If I had a pink hat,
that
we would have gotten the AI credit.
It could have been a multiple expansion.
I agree with that. Maybe I should put that on.
Yeah, it could. That could expand the multiple.
Well, we'll take it. Yeah. We'll take it. But in all seriousness, I think that if you look at it, everybody's talking about AI as a new product, and we were talking about it as foundational, and it just confused people. So now we're talking about it as a new product, Athena, and everybody loves it. So it's great. But what I would tell you is that the companies that are doing the add-ons to their antiquated platforms, they're not going to win. Because think about it. If you've got a marketing platform and you're sitting here, you've got to step out to the artificial intelligence to do a query. The AI then has to do a data dip into a data repository to go back to the algorithm to create the intelligence to inform the platform and then take an action. Think of that in a world where we have to serve an ad in a millisecond. It doesn't work. So what they do is they jerry-rig it to say, okay, we're going to look at 3 attributes. If this is a male, 24 to 44 with a household income of $78,000, we want to run that ad. We might put 30 or 40 incremental attributes. What have they read in the last week? What's their credit score? What are they focused on? What are they doing before they can even serve the ad? We're done. And that allows us to take all the waste out of our clients' marketing budgets, which leads to greater return on investment.
All right. That was enjoyable. Learned a bit more about Athena just by watching that. I need to dig more into that one.
Yeah.
Do you hear any? Do you hear yourself in the background? You don't hear yourself in the background.
No, not anymore.
Okay, good.
Yeah, I mean, I have a lot to say. I don't know how long we want to spend talking about it.
I mean, you guys can go ahead and talk. I actually got to step away for a couple minutes, but I can let you guys have at it for a little bit.
Yeah, I think you already watched it, Nick, but for me, the big piece, and honestly, I don't know how I never knew about this or heard about this, but when he said they spent 3 years re-architecting for AI, I knew they were like a Lemonade where they built their platform on the basis of AI. Similar, precedents of like, we're gonna build our platform to enable for that, but I didn't realize that it was like, all right, we're gonna rip and replace and told the board. And so for me, that was huge. And he took big point he put was it's hard to put AI, a modular AI, onto an archaic platform.
Yeah.
And for people that don't know, I work with Salesforce and CRM literally every day of my life, and they are doing that exact piece where they are trying to sell this magical thing called Agentforce that doesn't really work and is not the bolt-on solution they try and sell it as. And so you see an archaic system that was built in 2005 try and use a new modern solution like an Agentforce or an AI agent they try and sell it as. And so for me, that's a big thing as well, where these slower or older companies did not build architecture for that with that in mind, similar with Adobe. And so I think they're going to have a harder time catching up. Obviously, they have a crap load of capital, and they probably can acquire and merge and things of that nature, but it's not natural to the system, and so it's going to take a lot longer to get that organic growth from an AI product. And so for me, that was like the big first piece of like, I mean, hello, I think that it's an obvious, it's bright as day to me on that.
Yeah, no, I completely agree with you. And we were talking in our little private chat here, but for the audience, when David had his hand out like this, and he was saying how if you're sitting here and you're trying to do some sort of AI action or data query, right? In these other platforms, these competitors, he was alluding to Salesforce and Adobe. You have to hop out of that customer data platform in order to do a data dip and come back in. There's latency involved in that. That time that it takes to go from your customer data platform and do that data dip, the AI action, whatever it may be, the inquiry, the request, whatever action it may be, that agent to go do whatever that task is, Zeta completes the entire process before that even happens. That in itself is the value proposition. Zeta says, hey, instead of having all these plugins, all these different platforms, all these data silos all over the place, we're going to make one unified platform, one block. So the data can move freely from one end to the next. And that in its entirety essentially is data continuity, right? And you don't lose information. You have information quickly, and allows you then to stack automations on top of that platform. And then on top of that, you can then bring in agentic applications. And I've been hammering the table about this, saying, hey, 2026 is going to be the year of agentic platforms that are, one solid unit, that are agnostic, that can be applied to anything. They don't really care what tech stacks they use or whatever enterprise client uses. They wrap themselves around you and your tech stack, and they centralize that entire component on first-party data. They build that unified platform on top of that. On top of that, there's core automations. He talked about Zoe, that Zoe platform, early days. And now, finally, with Athena, is that agentic layer where it says, hey, let's deploy agents through that entire ecosystem to go complete things, so there's no human friction layer. Because at the moment right now, let's just say you spin up your Aria and you spin up Adobe, and you're very bullish on Adobe. You spin it up and you're like, hey, how do I use this thing? And then you pull up YouTube and you're like, let me watch a YouTube tutorial on how to use this thing. And then you spend a couple hours, you're struggling. Okay, you call a couple people, you call support, you try to figure it out. With Athena and Zeta, you don't have that problem. Why? Because you just communicate with it. And that removes that friction layer, that knowledge barrier that prevents some people from utilizing a tool and then some people from actually being able to utilize a tool. That's essentially the value proposition here in its entirety with Athena. And then obviously it's the flywheel effect. Meanwhile, while we're watching, I clipped up part of that video where David highlighted that he was having a sales conversation with some sort of enterprise client, or at least prospect. And she was saying, this is free? And he's like, yes, this is free. And I guarantee you, when you start using it, you're going to spend 300 to 400% more on our platform. Essentially what Athena is, it's this free entity that they allow a customer to use, and it becomes an engine for cross-selling. Why? Because Athena is going to start recommending optimizations, sending you notifications that say, hey, by the way, if you make this one change, you can get this much more ROI or this much more return on ad spend, right? And clients then are going to ask themselves, wait, why don't I do that? Let me just, pay the extra fee per month for this subscription, channel, whatever it may be. Let's just say they don't use programmatic television, right? And they find out that they're going to be able to get 5% more ROI by doing exactly what they're doing, but spending just a little bit more money. And they just subscribe to it. That's what Athena does. It's this conduit that allows them to create a much better, more efficient flywheel.
Yeah, I was going to say that with a lot of these software companies, obviously you're paying the engineers a lot of money, but SBC also comes with the amount of sales that a lot of these salespeople do, right? So go-to-marketing is also a massive part of, sorry for the noise in the background. Go-to-marketing is a massive part of basically making money in software. Obviously, you can make great software, but if you're not selling it, you're not going to make any money off of it. And you also have to be very competitive, especially in this sector. Like Zeta is not, let's not be blind here. Zeta has competitors, okay? Like they have competitors, and some of them are multi-billion-dollar companies or hundreds of billion dollars like Salesforce. And the thing is that Zeta kind of provides like a different type of software other than just Salesforce. As you were saying, Agentforce is trying to assimilate to the modern technology we have today with LLMs. Zeta is pretty new in that aspect where they don't really have to merge into it. They just have to continue doing what they're doing because they already have a cloud native platform. But more importantly, if you have a salesperson go out there and they start upcharging other clients by enrolling them in new services and stuff, that salesman gets a cut of that, right? And on top of that, that salesman needs to continue convincing the client to continue signing up for those products and possibly upsell them more. And that's like extra work for the salesperson. So you have to pay the salesperson more and you're giving them a cut and so on. With Athena, you don't really need to pay any fees for doing that, right? And when I say you, I mean like Zeta doesn't need to account for that compensation or I forget forget the name of the term of getting like a cut of whatever the sales is. I don't know why I can't even remember that term in my head right now. Commission, yeah. They don't need to account for that, but also it's much more efficient because Athena is already doing the back end for all of their clients, so they don't need. So I guess they can kind of reduce their headcount in their go-to-market team, which is arguably one of the most expensive teams in the company, besides engineering, of course, by having the automation of upselling and cross-selling products to different clients. And of course, you know, someone said earlier in the chat, this guy's a salesman. Of course, he's a salesman. Like, if you look at these software companies, the CEO is always like an amazing salesman. Like, look at ServiceNow. The CEO of ServiceNow, Bill McDermott, used to be Frank Slootman, who was arguably one of the best salesmen out there, who actually took ServiceNow IPO, became the CEO of Snowflake. And anyways, ServiceNow, Bill McDermott was like a killer when it came to sales, right? So like these CEOs have to be great salesmen. That's just or sales people, right? Salesman or whatever it is. So if you're having your own AI product or AI agent in this case, knowing exactly what the customer wants based on their data, but also based on their additional prompts that they put in the system, and recommending certain things that cater specifically to their needs, which is a lot to do for a salesman who has like maybe 12 different clients or whatever it is, right? You're becoming efficient for the company, but you're also able to cross-sell more at a much wider scale and faster scale than having actual people doing the sales. Now, there's other companies already doing this, but like doing this in this region, it sounds somewhat new to me, right? But also adding all the other factors and stuff, that's kind of what builds on this is kind of what builds on a thesis for a company, right? Like this is one of the theses that I have that makes me bullish Zeta.
Yeah, 100%. I think I'm super passionate about the CRM space because I feel like it is a lot of archaic systems that are kind of losing in the battle of the new business model. A lot of them are trying to move to a consumption-based model because they're typically on like a seats or license-based model, which is becoming a lot of disgruntled clients, a lot of disgruntled customers on their side. And on the front of archaic system, last year, Salesforce acquired 8 companies. 8 companies in 12 months. 7 of them are AI or automated related companies. So they are trying to pull themselves out and compete in this race. And they're still, in my opinion, falling behind as I work with Salesforce every day in my job. And so, again, I think the whole piece of them spending 3 years re-architecting the entire solution to me is just massive, is why I like them. And another thing I like about them is the fact that they're kind of going towards using Athena as a loss leader and going towards the outcome model. Sort of like, and again, everyone hates this, like a Palantir. No BS attitude. It allows anyone to become an engineer. AIP, the goal of it was to enable anyone to become an engineer. And Athena's going the route, enabling anyone to become a marketer. Some random person could now become a marketer because of how powerful it is. And so I like that they're going that route as well. And that's, why you see a lot of it on X. It's not Palantir. To me, the moment is around Palantir, where AIP and Athena are sort of similar for the company in terms of like momentum, sentiment, and things of that nature. But yeah, I'm pumped. I think we'll see a lot of growth from them because of Athena at the end of this year and beginning of next year for sure.
Yeah, I'm surprised about, we heard they flirted with the topic of, hey, we have a partnership with OpenAI and we're going to be working on AI answers. Now, it's a very vague term. For me, what I interpret long-term, and I made a long post about this months and months ago, is about GEO technology. Zeta made the announcement about GEO technology, which is generative engine optimization, which is the successor eventually for SEO. Many platforms had an update today. A lot of platforms push updates on Fridays going into the weekend. They can do some bug tests, test things out. And I noticed ChatGPT did an update. Now, I'm not too sure. Maybe this is just Canada. The US maybe had it a little earlier this week. But I'm starting to see a lot of GEO activity, where if you start researching companies or different types of companies or products, you get these little hyperlinks embedded into your results, which is very interesting, right? Because this is exactly down that technological loophole that Zeta talks about and David talked about when they announced GEO technology. And I think that's the potential for a more comprehensive partnership. And I think that's why they're kind of vague here. When I interviewed David, I asked him about that a couple of times. Obviously, this is early days. This is before the formal announcement. But I think this is going to be a theme for the future. It's like, okay, how can Zeta route more people, more clients so that they can be represented properly in these LLMs. This will be the very, this is the type of technology that I'm very keen on. I think there's a lot of potential here. Not many people are talking about this. There's a lot of smaller entities working on GEO technology, but on the enterprise standpoint, Zeta is really the first to deliver this. I mean, there is SEMrush, but nobody really is able to deliver this in this form factor like Zeta has. So this is something to watch. And I think there's a little bit more robust of a partnership developing behind the scenes that they haven't alluded to. Or sorry, let me correct that. They've alluded to it, but they haven't overtly said it.
Yeah.
That's something that's just kind of my takeaway, because if you do listen to the interview a bit, they tiptoe around some of the OpenAI stuff. And I think there's some stuff going on there that's, that's in development. Let's put it that way.
Yeah, I thought it was interesting too. And maybe just to play, I don't want to say bearish, but a bearish side of how he said that he thinks OpenAI will be the pure play moving forward. I do think, they're putting a lot of eggs in one basket, being OpenAI being their sole partner. They're obviously not a profitable company. They're not public. I don't know the numbers. No one does. Also, a lot of companies are sort of dependent on them. So I feel like there's a chance they're going to always be alive. But on the chance they don't, I think they're throwing a lot of eggs in one basket. He obviously has to say that as being partner with OpenAI. I just found that interesting that he was saying he thinks they're going to be, the pure play. He also said, don't doubt Google throughout Google there. Just said, don't doubt Google, which I thought was smart. But I just found it was a little interesting that maybe there's all eggs in one basket sort of mentality there with OpenAI. I mean, I'm just trying to think of a different perspective, but I found that interesting too.
I mean, if you look at the market share for generative AI traffic, OpenAI is like 60%. Google's like close to 19 or almost 20%. Actually, no, I think it's like 13 or 15.
Google's declining too, right? It's been declining. Like OpenAI's
it's been declining. Yeah, they used to be 80%. In a matter of a year, they decreased down like 60-something%. But this is kind of like, I don't want to compare it specifically to it, but it's the only example I can really think of in my head is if you think of like GPU, general compute, or even ASICs from that case, like NVIDIA is always going to have the dominating market share. But these other companies don't need that much more market share in order to become very successful, right? So if Google goes from like 20% to 30%, like that's a massive move for Google. That's a 50% increase. If an OpenAI goes from 60 to 70, okay, that's like, that's like a 13% increase. It's still something, but it's not like a massive move, right? But I think it would take a lot for OpenAI to basically get dominated by Google. Now, I think the more important part is the rate of acceleration. For how big OpenAI is, how big Google is getting in terms of dominant market share versus OpenAI. But OpenAI will always have that forefront dominance in this entire sector. I don't think that's going to change. The reason why I don't think it's going to change is because there's too much invested in OpenAI. There's too much government interest in it. There's too much enterprise interest in it. There's too much global interest in it. They're building infrastructure everywhere. Like Google right now, it has a lot of eggs in a lot of baskets, and these are big eggs in different baskets. But like, I don't think Google is ever going to replace OpenAI. Like, it's very tough to say that because also, if OpenAI goes down, then I think we're probably going to be in a bear market. Like, I don't think the market's going to continue going up with OpenAI going down. If that were to change, it's going to take years for that to change. But we'll see. It would only make sense for him to say that. I think it would be in his best interest. For their company's reputation to be able to do that.
Yeah, I agree with you.
Something else to note too before we hop off, and something I've kind of talked about it multiple times, but Athena is still in beta. You mentioned a couple times. There is like a pilot program or special access program, I think they called it, where some of their enterprise clients are currently using it, and then it'll be out of beta at the end of this quarter. So I think that would be technically April would be the start of open access. To all clients. So just something to be aware of as an investor. Same thing happened with AIP, where you didn't really see with Palantir, you didn't really see much revenue expansion until a few quarters after. A lot of clients are going to get their hands on it and be like, what is this? How is this working again? And they won't really see the revenue or return on investment probably until Q3 or Q4 of this year, then really into 2027, if I had to guess.
Yeah, that makes sense.
Just something to think about as an investor too.
Yeah. No, I agree. And I really think that you're going to still see that flywheel engine kick on, probably tail end of this year. You're right. You're right. But it will be very interesting to start to see even more customer stories coming out of beta. because when they formally release that, it's going to be, they'll have a presser and everything like this, sort of like, letting everybody know, hey, this is formally released. Listening to this next earnings call will be very interesting too, because they're going to have a lot of comments about that. I guarantee you there'll be a lot more analysts there at this call compared to last, because of all the attention they've gotten. And not to mention, like, I know we're kind of like recapping everything here. So on the outro, there's a couple more catalysts. I've highlighted this before. GAAP profitability, it could be within February. We could hit that in February, right? At that next earnings report. The other thing is that legal case. Once that judge makes a decision, my best estimate is end of March by the latest. It could be a little bit later. New York judges are a little slow. They're swamped. So who knows when they're going to settle that. And that being said, talk about settling. If it does go to court and it says that, the judge is willing to hear it, they may very well settle out of court even before discovery. So, they have insurance for these types of things. That's something to keep in mind as an investor. So I think this legal case is going to go away. That cloud is going to disappear. GAAP profitability. I believe Sam mentioned this before I hopped on. A lot of companies, a lot of hedge funds have rules where they will not invest in companies if they're not profitable, GAAP profitable. So the moment this happens and we start to see that sustainment of GAAP profitability, going 1, 2, 3 quarters, the amount of an interest from the larger investor community, the hedge fund professional investor community outside of retail, that intention just in pure, in terms of sheer volume is just going to skyrocket, in my opinion. You're starting to see a very similar story with UiPath. They just hit their, second quarter of GAAP profitability. So
their third consecutive quarter GAAP profitability, and I think they're guiding for a full year by next quarter. But yeah, we could definitely do one on UiPath next time. But yeah, no, I agree with that. Yeah, go ahead.
No, you go ahead. I was going to add off of something. You go ahead.
Oh, I mean, I was going to say I got to close this out in the next couple of minutes.
Yeah, I think we end off with what do we think Dan Ives is going to do as a price target? With Palantir, when it was like 17, he came out and said $25 a share. Everyone, the shit hit the fan. Everyone was like, "Oh my god!"
I still remember that. I still remember that.
And then he raised it to 40 after it hit 25. So what do we think Dan Ives is going to? I think it's pretty obvious he's going to create a price target either this quarter or next, and add it to his AI fund.
I think it's 46.
AI place.
I think it's going to say 46.
Yeah,
46. Okay, I was going to say $40. I think.
Oh, really? I think I'd say like 50, like some egregious price target, because, well, one, look at the valuation. Like, it's not even demanding, right? So when Palantir was like 15, $17 and he gave like his price target 25, like, yeah, okay, that was a 50% hike, but like Palantir was already like kind of fair value around the time. Like, I still remember looking at that too. Like, everyone was kind of surprised, right? They were, whoa, I mean, like, obviously, if that was today's numbers and the $25 price target, that'd be a super undercutting its valuation because they've grown so rapidly. But with Zeta, it's like we're already 3 years into the bull market. Like, I feel like he's going to be super optimistic.
That's true.
Yeah.
He usually does like to be the top analyst too. And I think that right now the highest price target is 44. So he probably wants to be the top. So yeah, he does probably right. Like 45, 50 would probably be where he puts it.
I wouldn't be surprised. But if he makes it part of his AI 30 and then adds it to his ETF, that's definitely going to be like.
I think he will. I think he will.
Yeah. If he does, that's going to be something. But also, one thing is that if we reach GAAP profitability next quarter, and then they have a few more quarters GAAP profitability, then 2027 becomes like an S&P 500 inclusion. That's like another catalyst too. This is why I like to look for these companies that like inflecting profitability and invest them in the size versus like companies that have been doing it for a while or companies that are not profitable, but like company like this, like it's only, I hate to say no brainer, but like this is kind of a no brainer. Like it's so obvious at this point. And the bear thesis that I always read is like, some of them make sense, but some of them's like, how do you even know? Like, you don't even know what's happening. Like, you're guessing based on like previous outcomes, but it's like, when you get this kind of retail interest, right? So it's just one, like obviously we're retail investors and we have 100 people watching this on YouTube and aggregated right now. And then you think about all the analysts starting to get on it and then all the interest. And then you think about the gap product. It's like all those recipes put together is what equals a stock that just goes crazy. Right, but it's undervalued, so which is great. But anyways, guys, great for coming on. Thank you, Wealthmatica, Nick, for coming on. Thank you, Nate, for coming on. This is Nate's YouTube down here. This is his X account, and this is Mr. Zeta's X account. I don't know. Do you have a YouTube page or?
I do. I connected it. I just didn't want to cooperate.
Oh shoot. Okay. Well. I'll put it on next time. I'll put it in the show notes actually.
Yeah, no worries, no worries.
But yeah, you also share your portfolio on Blossom as well. So I'll put those in the show notes if you share that with me. And but yeah, guys, thank you for coming on. It was a 2-hour stream, but appreciate the guys who stuck around, the people who stuck around, and join us for the next one. All right, take care, guys.
Yeah.